My name is Lar Karpel. I'm CEO and founder of Tradespoon. And today we're going to have our weekly strategy roundtable where we talk about current market conditions, answer any questions you might have about your subscription or market conditions, and see what to expect next. Before we jump into trading psychology, let's jump into the market. Let's look at the weekly chart, sum up the week, and look first. I think earnings and even macroeconomic data is less important, right? Market participants tend to overlook that data. You can see it in price action of 10-year yield. Unemployment data came in worse than expected, right? 90,000 jobs were lost as opposed to estimation of $50,000 jobs created in the employment report. Initial reaction that rates dropped. We retested 10-year yield, retested very important level, that 393, which would be a March 25 low, almost got to the September of 24 low. But then immediately traders focused their attention on the Middle East, war in Middle East, and the price of crude oil, right? That will cause the inflation. And you can see crude oil is up another 10%. And this week alone, we went from 70 to almost 90 level. I think we had a 90 print on crude oil. And the idea is that the longer the conflict in Middle East stays, right? I keep asking Grok, did oil tanker traffic in Strait of Hormuz restarted today? And the answer is very little, 0 to 3 tankers. I think Iran agreed with not to bomb, Chinese tankers that are going to China, because China is very dependent on that region in Arabian Sea and the oil from Iraq, Iran. And that traffic has not restarted, right? It's been a week, right? And the longer it stays at this level, the longer the crude level oil is going to keep going higher, and then the higher the interest rate will jump. Right now, no panic, no new signals, right? If you look at the 10-year yield, we're still not above 430. So I would keep an eye on 430. We were approaching that level, but not there yet. Dollar, right? Strength in dollar, one of the safe havens. It's not even gold. It's not Bitcoin. It's not consumer staples or healthcare. If you look at all of these kind of safe haven sectors like utilities, still stable, but not rallying. Consumer staples actually sharp pullback. Healthcare sharp pullback, right? Bitcoin still underperforming. So one place where usually you hide, right? It's treasuries, but you can't hide in treasuries because of the fear of inflation, right? And stagflation if the oil prices persist to be higher. And one place where people are hiding is the dollar. No new signal. We're still trading between 196 for the past, probably since March of 25. So there is no new signal. I don't think the equilibrium between bulls and bears has been broken, but nonetheless, that can change, right? The longer the conflict stays and the Strait of Hormuz stays closed, right? Despite assurance from Trump administration on ensuring the cargo and protecting the oil tankers, nobody is willing to take a risk, at least as of today, right? And you can see SPX retested important levels, right? We talked about SPX retesting it twice this week, the 6,700, right? I would say 6,700 is the last man standing, right, in terms of gamma exposure. You can see the months of March, that's where most of the positions are in terms of futures market and options data. Most hedge funds, most sovereign funds, anyone who's managing billions of dollars worth of portfolio, you can see they're hedging in March positions, which we still have 2 weeks left after today in March positions, and April, right? They're still built out in April. Very similar setup if we travel in time to let's see, 24. Do we have April, yeah, 24, right? We had a pullback in April of 24. It kind of started towards, in March, and then reached its bottom in first 2 weeks of April, and then the stock market rallied. 22, was the bearish market, so started sharp pullback, but it kind of continues. So that was the recession, right? For now, no one is calling it a recession. In 20, right, in COVID, right, COVID kind of it started to selling off at end of February and reached the bottom kind of towards the end of March, and then started rebounding in April. You can attribute it to, Powell saying that they're just going to stimulate the economy. You can attribute to any other headline news, but positioning is important. The fact that there is a March expiration, and if there is no stabilization in oil prices, we're probably going to continue to be under pressure for the next 2 to 3 weeks, right? I'm not saying this is similar to COVID, but just timing. Not the magnitude might not be similar. Hopefully, it's not going to be similar, but the magnitude of correction. And here, 2018, right, the first time tariffs, right, the first term of Trump administration, right, back in 2018. Again, China, the sell-off started in February, right, and reached the bottom around end of March, beginning of April, right? So I think this is something to keep in mind, that this pullback could continue till end of March. That means most likely, if there's no settlement in the oil prices, we will get to 6,500 or 6,300, just depends how much uncertainty persists, right? And then probably end of March, April would be a good opportunity, as long as you don't believe we're hitting the recession, to start thinking about buying. But first thing first, 6,700 is important level. If you look at the SPX in terms of positioning, right? We have the biggest position is 7,000. That's still the main overhead resistance. There's some position at 6,900, 6,800, not some, large, large open gamma. 6,900 is about $22 billion. 6,800 is about $16 billion. And then you have 67 is $9 billion, right? So very important for the bulls to hold on to 6,700, because if not, then we're going to probably 6,600, already 6 billion, and 6,500, right? So a lot of people already hedging the 6,500 levels and 6,600 level. So I'm keeping an eye on 6,700. So far, bulls are able to kind of a stage short-term rebound off of these levels. March, beginning of the March, looks like similar price action now. But only time will tell. So I would, for now, hold on to your hedges, right? You can add to some of your long position if you think 67. If you're aggressive short-term trader, then I would say, yeah, 6,700 is kind of a well-defined stop level. There's limited room to the downside in 6,700, maybe 1%, but we could be at 6,900, right? If there's a positive headline over the weekend, another exemption for, I don't know, South Korea and China, and the traffic, let's say, restarts because Iran said, well, okay, we're not going to bomb, tankers that are going to China, and you'll start seeing some, instead of 0 tankers to 3, maybe 10 to 50 or 10 to 20. I don't know what the magic number in that equilibrium, but then market will rebound. So if you're aggressive short-term trader, you can say, okay, Vlad, as long as we're above 6,700. As long as we're above 6,700, then it would be I would consider, if you're not short-term aggressive trader, you don't like to day trade, then you could start thinking about buying, but only if you can, you have enough cash, and probably, I think it's a much better buy at 6,500 and 6,400. And I think there is a, high probability that we could get to these levels. So you can, hold on to your hedges, maybe do small buying at these levels with the idea that at 6,400, 6,500, you're gonna, this would be a better entry point. You can see kind of a strong support at these levels, right? We spend a lot of time in middle of 25, right at that 6,400 level. Any questions? I have a lot of people today. So determining position size is very important. So I encourage you to go through these exercises, right? Kind of what if scenarios, right? These mental exercises, trading psychologists or psychologists in general, when you deal with uncertainty, you want to kind of go through these exercises, whether you're in some kind of a special forces or you're a doctor or a lawyer or basketball team. The idea is kind of you want to go through different scenarios, right? On one hand, you have a fear of missing out because companies are still growing at double digits. Yeah, AI hype is there, but probably companies are still making money. You can see price action of Marvel was up as much as, I think last time I checked, 15% up. So companies are making money. They're outgrowing double digit. And when that curtain of uncertainty is lifted, then people will concentrate on earnings, especially as we approach in April, the next earnings cycle. Then you have a fear of missing out, right? That we are, most of the wealth management companies have predicted up year, anywhere from 5 to 10% up year. That means we're going to break 7,000 sometime, right? So you have a fear of missing out on one hand, but on the other hand, fear that we could revisit 2025 levels, right? 6,000, right? So you have a fear of future regret. And the idea that you want to make sure that you're prepared for both scenarios, right? You have enough cash that if we break 7,000, then you have investment in the market. But you also have enough cash that if we drop to, let's say, next level would be, if this level doesn't hold, more likely than not, this would be your next level of support, right? After the current level, assuming 67 doesn't hold. So that's your support number one, and 6,000, very large positioning, usually in these nice round numbers. If we do get to 6,000 level, you do want to make sure you have enough cash, right? You do want to have enough cash because I think that will be a great opportunity, assuming we're not in a recession and oil prices, crude oil is going to drop from 100 back to 60, right? You definitely want to have enough cash to buy. So that's the idea of the future rehearsal exercises. And you want to go through, and if you're aggressive short-term trader right now, you basically say, okay, my support number 0 is at 6,700. How much money am I willing to invest? You probably don't want to short the market right now because it's oversold. It's too late, and we're sitting on the main support level. But if you're going long, how much money are you willing to risk, right? And you go to this if scenario. If you're day trader, I propose not to risk more than 0.5%. If you're doing day trading, less than 1% of your portfolio. If you hold in position overnight, 2.5%, right? So if average account is $10,000, right? So if you're managing $10,000, it's $250. So the risk is $250 per trade. So, you can buy SPX, but let's say you buy SPY, which is roughly at 676. Just remove this 0. So how much money am I willing to buy? Well, if we break through 6,700, let's say, call it 6,680, right? That's 1.5%, right? So 1.5%, let's call it 10 points, right? So you have 10 points in risk. That's your stop level. If you're going to go long now, I would say your 10 points is your stop level. And you divide 250 by 10, so you can buy 25 shares, right? You can buy 25 shares, right? If you're doing day trading, short-term, aggressive trading. And if you hold your position longer, same scenario, right? I would probably use for a lot of your positions, if you're down more than $250 on any of your positions, then I would consider exiting them because we could be at 6,500 level if the current level don't hold. We could actually be at 6,000 level, right? That answer purely depends on when the Strait of Hormuz will be reopened for traffic. With the war of Iran, without the war of Iran, change. But that's the unknown, right? You need to be prepared that it could be another few weeks. You also need to be prepared that it could be, next week when it's reopened. But nobody knows. So that means you need to be prepared for both scenarios. Any questions on SPX? All right. How do we help on Tradespoon? We have different models, right? So under Stock Forecast Toolbox, if you go to Quick Negation Stock Forecast Toolbox, you can see 10-day model predicted. Basically, this model runs every day. This is my favorite model. Really helpful. Basically saying that right now, it doesn't see a breakdown above 6,700, right? So until and model needs probably a couple days to adjust. So assuming we're not staying below 6,700, right, for a couple days, model basically say at 6,700, you might want to consider going long. And if we get to 686, 690, consider going short in the next 10 days. Model doesn't say you can say on March 13th, Vlad, the stock is going to be 671. You can't say that, right? You can't assume that. Model basically just saying you're looking forward, looking to the future for the next 10 days. 670, you want to consider buying. 686, you want to consider selling. And if you look at the 6 months prediction, right, which gets updated only the first of every month for the months of March, model predicted, we're probably not going to make new highs. So consider 694, 690 is your overhead resistance where you want to go short. And don't be surprised if we do get to 620, 630, 650 level on S&P, right? So both scenarios are possible, and this is even before the war in Middle East, right? This happened on March 1st. So model already saw that after NVIDIA earnings and after other events, we're not making new highs despite strong earnings from NVIDIA. So if there's no positive catalyst, then on any negative news, you could have sharp sell-off. So at 626, you probably want to consider having enough cash to go long. And at 690, you want to trim your position. So that's Stock Forecast Toolbox. You can also enter your signals every day. Sorry, am I in the wrong? So you can enter, some of the stocks today. Model identifies CF, CR, and Valero Energy as the stocks that still outperform in the market. Right, the model runs for active trader overnight. So it basically identified that if you want to go long, where do you see pockets of strength? You see in some of the commodities, right? Agricultural product, chemicals products. CF industry continues to grind higher. Valero Energy, some of the energy names continue to trade higher. Some of the consumer staples like Kroger continues to trade higher. So it's not an indiscriminate sell-off. And the goal for the model to find opportunities where the stocks can outperform the market or their respective industry groups. And the idea, let's say you want to buy Kroger, you can buy it at 66.38 or 71.57. If you do see kind of a gap up, then it just depends on your trading plan. You might want to consider chasing the stock if you think there is still more room, or wait till it comes back to the previous low level. So that's active trader. You can see the history of these signals. What about yesterday? What was the signal yesterday? Some of the transportation company, ODFL, but also got caught in a sell-off. LYB, some of the chemicals, again, strong uptrend, and energy like PSX. So you can see every day what were the signals. If you want to leverage your account, you can go to options, right? And same thing, instead of buying CF 100 shares and spending $10,000, you can buy one contract for $2.10. Same level, 106 plus 210, 108.10. And you have a lot of leverage, right? Here, you're only risking $200. So you're mitigating your risk. You're giving yourself leverage, but you do have to be correct on timing, right? You can say this week expiration or next week expiration, but I encourage you to give yourself more time. Any questions on Stock Forecast Toolbox, active trader? You can also use longer term models, weekly trader, monthly trader. Again, these are the models. The weekly trader runs every weekend, right? Once a week, we publish signals. Same idea is, on Monday we said Ford was outperforming the market, actually sold off significantly in the past few days. Or Schlumberger, right? You do have sharp pullbacks in some of these names. But these are some of the signals longer term, right? Weekly trader, that at least going into this week, right before Monday, the signals were published before Monday. Ford was in strong uptrend. It sold off due to the energy crisis, right? Which model did not see on Monday, but you do see kind of sharp pullbacks in some of these momentum stocks across the board. So but if you think this is overdone and you want to find stocks that were in uptrend going into this week, then you can go to weekly trader. Same idea, monthly trader. Right? Same idea behind monthly trader. Gives you signals for kind of a longer term trade, Occidental Petroleum. So these are the models based on the active trader. The idea is to hold the position for a couple hours, couple of days. Weekly trader for a couple of weeks and months. Monthly trader could be a couple of months where you're holding the position. But you have to manage them yourself, right? Decide based on your portfolio composition which stocks you want to be diversified. If you already have energy name, then you probably don't want to buy another energy name. But if you don't have exposure to energy, then this is something you want to consider buying. So that's the signals under active trader, weekly trader, and monthly trader. And then stock forecast toolbox. We talked about that. You do have research, right? You have seasonal charts on spiders. You can see usually, seasonality point of like usually end of February, you have this sell-off, right? We talked about COVID or 2018. And after the expiration starting, end of March, April, that's where you usually start having better seasonal effects. So we do have seasonality chart, we have a probability calculator. You can see, right now, 676 is a support, 686. I think it's actually VIX is rising today, so that's probably wider, but 670, 690 is probably what you want to consider. So these are the tools. And in terms of portfolio, elite circle, right? So you can actually see every time I trade, I added to Northrop Grumman position. I closed my spread in Marvell, right? That's actually had a strong rally. I did Iron Condor. But Marvell moved beyond, beyond one standard deviation. So you can see, if Marvell is up 16%, right? That means that at least AI theme is still there, and companies that are able to generate cash and justify their investment, they get rewarded. So you get combination of both stock trades and option trades in your portfolio. And that's Elite Circle. You can also participate in Morning Bell and Closing Bell. I manage along with Keith Harwood from Option Hotline. So Keith brings a lot of background into from market making perspective. He was a trader on the floor. He has a deep knowledge of options and futures trading and portfolio construction. He does consultation, coaching. I know some of you already students of Keith, but you can schedule a free consultation. I'll drop this link here. If you want to talk for free, first consultation is free, and he can help you with some of the points for portfolio, how to hedge your portfolio, how to take advantage of the current market volatility, what to expect. And if you're looking for more mentoring, group trading or one-on-one coaching, you can also schedule that consultation. So I'll put that inside of the chat. let's see, where can I put this chat? Put inside of the chat. So if you go to chat, you should see it. Yeah, you should be able to see it. So schedule one-on-one consultation with Keith. You obviously can go to pricing and try any of our services, right? We talked about ticks, we talked about some of the tools, we talked about premium portfolio. We didn't talk about premium portfolio is one trade a week, right? So this week it was CF, right? So on Monday or on Sunday model run, and it picked CF as the trade idea, right? And you can see this week CF had a very strong uptrend and continues to grind higher. And you can execute this either option spreads or option trade or single stock, right? So this is one idea a week. That's a premium service, and you can find the premium service here. Vlad's portfolio, elite circle is, I showed you where I showed it here. This is where you have access to open morning bell and closing bell. Keith and I manage both of the sessions. If you can't make it, then there's a recording. You can always watch a recording. And you can look at all of the orders and positions, right, real time, and you could either through Discord or mobile phone number, you get messages as well. Any questions? All right. We also have Robo Investor, where this is just a stock portfolio. If you're not comfortable trading options or day trading, you want to kind of a longer term, usually hold position for a few weeks, sometimes a few months. So that's Robo Investor, is a portfolio of stocks. Premium portfolio is options, one trade idea a week. Elite Circle, almost every day there are trades in Elite Circle, and you can select which one to follow all of them. And then Spread Trader is the same as Premium portfolio, but you just don't have access to signals. And Shadow Trader, same thing. You have access to my portfolio, but you don't have access to tools. There's a lot of free content. YouTube channel, event recordings, so you get weekly webinars and newsletters, right? I encourage you to add info@tradespoon.com so you get our emails, and you'll be able to register for a newsletter. There's always weekly newsletters, getting started guide, learning center, and so on. All right, any questions? BJ, Chuck, Joseph, Catherine, Michael, Juan, Rahul, Rodney, Trader, Patrick, I believe. Don't remember, but I just see an email. And Bill, William. All right, guys. If there are no questions, thank you very much. Same time, same place next week. We'll see if there's, Catherine, thank you. If there is, de-escalation in Middle East. If there's de-escalation, I think market is going to have a strong rebound. If there's an escalation, or not even escalation, but as long as the Strait of Hormuz is closed, and if by next Friday it's still closed, still zero tanks, more likely than not, SPX level will not hold. Right? More likely than not, the SPX level will not hold. For now, buyers kind of still stepping in. Every time we get into 6,700, we'll see. Continue to do dollar cost average into positions. So what's my position? So first of all, I would hedge. So if you look, let's say I have JEPQ position, right? So JEPQ is where I get dividends, right? I have a dividends, and I did close the position, not close, I trimmed the position, right? If you look at my last trade, right, I trimmed the position when it was at 58.66. But now I'm trying to decide when do I dollar cost average, when do I buy it back? For now, I actually decided to hedge the JEPQ with the QQQ put spread. I've been trading around with the QQQ put spread, and I actually put back 590, 570. If SPX doesn't hold 6,700, then I'm hedged with the QQQ put spread. At this point, I have a hedge. This is a very large, one contract of QQQ is $57,000. One contract of JEPQ is only 5,000, 50,000. sorry, 5,000. 5,000. So I have a large hedge, similar price action I have in what's the other one? Carrier, right? In some of the industrial names. So I have a put spread and I have a stock, and I don't have I have 100 shares in options, but 30 or 40 shares in CAR. So I'm thinking about adding in CAR, kind of you doing dollar cost average, but I don't want to, you really don't want to call the bottom, right? You can assume that 6,700 is the bottom. Obviously, if you think it's the bottom, you can start dollar cost averaging. But I do want to see at least few days staying above 6,700. If you day trading, I would definitely do dollar cost average with a well-defined stop level. If you're adding and you're a short-term aggressive trader, I would say 6,800 on SPX. I would exit that position, 6,800. If you're a longer-term investor, I probably would also add and do dollar cost average. You can see, despite volatility and market sell-off, if you look at the IGV, you can see, it's turning positive, right? IGV is actually, trading higher. So there's not a lot of sellers left in the software sector. All right, guys, that's all I have for today. Thank you very much. Hopefully you'll see you in the live trading room. Joseph, thank you. BJ, Joseph, Chuck, Captain, Michael, Raul. Have a great weekend, and I'll see you either at the closing bell or Monday morning. And if not, then, next Friday, same time. Thank you.